Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny. And today we're talking about this whole China economic disaster scenario that everyone been talking about. We did a separate video talking about why it's been so popular on YouTube. We can go ahead and link that to this video. But today we're going to talk a little bit about the news stories and kind of like where we are in terms of the news cycle regarding what's coming up and other economic indicators.
Yeah, if you like this kind of entertaining stock market content where it's Two Super Guys trying to figure everything out, give us a like and subscribe, and let's get started. Two Super Guys Trade Stocks.
All right. This is the man behind the numbers. This is Xi Jinping, and he is up for reselection, which don't kind of sleep on that, right? We're in a midterm election year here in the United States. This is very important politically for him, right? And their numbers will be skewed based upon that.
Yeah, a lot of these numbers that have come out, I just don't understand how you trust them. Because they wouldn't even let U.S. accounting into their own, information. So
Yeah, up until recently, right? They made some accounting oversight board headway on that as BABA shareholders, something we've been following. But these are the kind of the major talking points, right? The major concern here regarding bank stability, right? There's people talking about this 2008 Lehman-like crash for the Chinese economy and whether or not you can trust any of like their assets that they have on their bank balance sheets. They don't. A lot of there's basically the most recent kind of tide of this, I would say, a wave of this, stems from this thing that started in mid-April, where there were five banks in this Henan province, which is like northeastern kind of China, that froze withdrawals. Right now, these banks were rural banks, smaller banks. They also were taking deposits via online like app, where they were offering between 4.1 and 4.6%, I think, in terms of interest rates. So above market. So they were trying to attract money. There's this weird cross-sectional thing that's going on between fintech and kind of traditional banking in China, particularly for these rural banks, where they're trying to attract deposits from other, portions of the country. These weren't local deposits,
right.
right? And the banks ultimately ended up having a little bit of fraud. There was someone that was arrested. Yeah, I know, right?
Surprise.
And that there was this big debate about whether or not these were truly banking deposits. No. And it's like a real question as far as what the Chinese backstop of the economy would be as far as financially. Now, it's kind of spitballed into this mortgage boycott, which is a separate issue, but is much more important, I would say. We'll talk about it here briefly in like a couple of slides. I have some like data on, where the housing prices are and what portion of GDP is kind of reflected by mortgages. The other thing that they have still evolving here is the zero COVID policy, which is basically locking down cities as they have these outbreaks of COVID. All right.
Yeah, and
The
that's,
final kind of
just to be sure, that's all variants of COVID,
yes.
even the very, very
Yeah.
minor ones.
Yes. I mean, granted, you'd have to look at the actual data from a standpoint of epidemiology and whether or not their hospital systems would be, so minor variant, but still, say a hospitalization rate of like 1 in 1,000. Well, you're talking about cities that are in tens of millions of people. That's a significant number of people that would potentially need hospital services, and then they have to know whether or not they can accommodate that. So it may or may not be
No,
the
I
right
agree.
answer for
There's
them.
more
You'd
nuance
have to
to it than
do,
what I said. I
yeah.
completely agree.
Yeah, you have to do more statistical modeling in order to determine whether or not it's the right thing. But in the interim, before this, their national congress and this potential reselection of Xi Jinping for a third term, a 5-year term, he's going to try to make minimal waves, right? He's not going to, be trying to like change the boat at this point. It's kind of his tendency over the last 10 years has kind of been locked in. So he doesn't want to make anything dramatic changes in the last kind of couple months here, right?
Right, that's fair.
So this is actually a picture from one of the protests in the early bank kind of closure seizure.
Hmm.
Ultimately, the kind of the equivalent to the FDIC in China ended up backstopping increasing amounts of deposits, and so your average person got back most of their money. Right? That they kept going up a ladder basically and increasing the amount, but certainly not something that is very trust inspiring, if you will. I get that.
Hey, hey, Vinny.
Yeah.
What does that sign say? Because
I was like, give,
I'm not really
yeah, I
sure.
don't. No, there was actual in the article they actually had it. It was like, give us back our bank deposits.
Okay,
That was
all right,
basically it. Yeah,
dope
not very
translation.
efficient. Yeah. So this is like the real crux of the matter. This is really where like I actually have a little bit of worry about the Chinese economy, right? The whole Chinese economy has this real estate Ponzi scheme mentality. They're relatively new to private home ownership. It's only been going on since the 1980s, and still the land is owned by the government. So what happens is these property developers lease the land, and a long-term lease. It's typically 70 years from the local government, and then they will develop it and build properties. Now, there's a couple of weird factors here, right? So, one, real estate is a big portion of their economy, right? 30% of their GDP, as opposed to like 16% or so for the U.S. So it's
Right.
it's double, twice as important in
Yeah.
terms of like their wealth building, right? Um, the other thing that's a kind of a real issue is the properties are pre-sold and they're paid in full. You take the mortgage out when you sign the contract. You don't put down a deposit like you do in many other places in the world. It's not unusual to buy a home that's under construction, right? At least here in the United States.
Right.
But you're not paying for it in full up front. You're paying on delivery.
Yeah. Oh, I mean, a lot of people wouldn't be able to. So that.
Yeah,
Yeah.
exactly. Because now you're paying two, mortgages or living kind of expenses as far as having to pay for a property you don't live in yet and pay for a place to actually live while that's being constructed.
Yeah, it'd be crazy.
And then the pace of the deliveries is not great. This is from it was a Nomura research report where they said pre-sale between 2013 and 2020, only
Oof.
about 60% of those have been delivered.
That's
That's
not good.
pretty bad, you
That's
know?
pretty terrible. I would lose faith in that immediately.
I'm pretty sure the PS5 has a higher delivery rate than this, and people can barely get a hold of those things.
Ooh, I'm an Xbox person, so
Yeah.
that was offensive. Ugh.
The other thing too is you look at this like this is a price to income ratio, right? It's like almost like a P/E ratio for a stock, but it tells you what the average home cost is compared to the income for the average citizen in the country, and this chart just goes up and up and up. You're basically looking at it becoming less and less affordable for the average Chinese worker in order to be able to afford a home. The reason why that happens is you get this divergence is that you're getting speculation in the market, right? People have been looking at real estate as an investment more so than it is an actual place to live in China. And when you get to that can only go for so long before it becomes unsustainable. This little yellow dot down here is the UK in terms of their price to income ratio. Yeah, not even in the same realm as you are talking about China.
I wonder where ours is, because I mean, it's definitely much harder to buy a house today than it was 8 years ago. Like
So
the salary to housing price disparity is definitely increased in the U.S.
yeah, this remember you're talking about whole countries here. It's going to be a pretty big, heterogeneous mixture in
Yeah.
terms of costs here.
Ooh,
But this is the
good
U.S.
word
right here. The average is
choice.
about
Guys, Vinny
4.8.
just stopped heterogeneous in a normal sentence. That was pretty impressive. All right, sorry, continue.
Yeah. So you're looking at about five, a little under five for the U.S. ratio. This is as of Q2 2022, so this is pretty recent data, but it's very, very diverse across the cities. You're seeing even more so in China, where you're looking at some cities where you know three times the ratio of others when you're talking about the tier one cities, as they call them,
Yeah.
their tier classification system. So it was very much dependent upon that. But even like when you're looking at U.S. San Francisco is about as hot as like a housing market you can get in terms of the cost of living there. It's still not even close to like what they're talking about for an average Chinese home
Yeah, it
in terms of
looks like the
ratios.
average Chinese home was 17.
Yeah,
That's
and it's only going
that's
up.
disgusting.
It is. That's definitely has the air apparent of Ponzi scheme esque. So I understand the worry, and it needs to be fixed. How it exactly unwinds, I don't know. Do I see a Lehman like collapse? No, but there needs to be something addressed.
Yeah. So what happened this week? China stocks were kind of shooting up a little bit. I don't want to say shooting. They were going up. NIO reported earnings, which frankly weren't great, and their chart's pretty fantastic because they just went straight up on those not great numbers. Um, but what happened was China's CPI rose at a slower than expected pace in August on all the other bad stuff that was happening. They got 2.5 year over year versus 2.7 in July. We were expecting 2.8. I don't know how we can trust these numbers, to be honest. I don't, take it with a grain of salt, I guess.
Yeah. Yeah, I mean, I get that. They're in a very different place in their economic cycle than we are, though. Whereas, we're talking about inflation of like 8%. They're mid twos.
Yeah, well, I mean, their COVID cases alone in like the first year was like, no, we don't have any. So
Yeah.
I don't know if I trust this.
Yeah, understood.
The producer prices rose 2.3% year over year in August. It was the slowest pace since February 2021, slowing from a 4.2 rise in July and below a 3.1 forecast. So that was actually a little bit weak. But it suggests the world's second biggest economy, China, is already depressed by property market weakness, which is what Vinny just said, and further lost momentum in August.
They have some real currency headwinds too, like talking about the transaction ratio or kind of conversion ratio between Chinese yuan and like U.S. dollar is nearing like a all-time low.
Yeah, also not great. People know we're big Baba people, right? So here's just some of the latest events. Tencent Holding added 7.6 billion shares to the clearing and settlement system. Most likely, meaning this is not confirmed, but most likely meaning that Naspers may have sold a part of their 29% stake in Tencent. That's a lot.
Yeah.
We already know that SoftBank sold the bulk of its stake in Baba in August, and Buffett decreased his holdings in BYD. So a lot of institutional dudes are heading for the hills. Great.
Okay. Interesting. I don't know if I would quite go heading for the hills, but taking some profits. Sure.
Here's Bob's chart. So I'm super zoomed out here because I just wanted to show you the last time we were chilling above the 200 average. All right. So that's going to be December of 2020. Okay. The reason why that's important, look at where we are coming here. Let me just zoom over. Okay.
It's a nice thing. If you stay depressed long enough, eventually the average will come down towards you.
Yeah, I mean, or we get pushed down more, though, is one of the problems. So you can see we hit here July, two beautiful hammer tops, then immediately rejected. Eventually here, we're within $14 of hitting this 200 SMA again, and we're kind of in this accumulation distribution phase, kind of sitting between $80 and $115. So that's, towards the high end of that average, but eventually we're going to have to hit it. I don't know what's going to happen. I know what I hope happens. But typically, when you have a 200 SMA hit, you need a lot of volume to push through it. As you can see, we did not get here. Look at this weak-ass volume here. It wasn't even close.
Yeah, piddly-ass volume right there. Yeah, I agree.
Nothing.
Interesting. So you could make some money selling some iron condors at the 8115 strikes, or you could keep selling covered calls in your Baba shares like I do.
I won't, because I don't know, they could announce something ridiculous. It's China. I'll do that for American stocks. I'm letting my 200 Baba shares just sit pretty at a not so great average, unless it hits 70. I'll buy more.
Yeah. Oh boy. All right. Well, let us know what you think about all this China economic news.
Yeah. All right, dudes.